Hello guys, today I have a very interesting one for you. We have all heard about how explosive the growth in the fintech sector has been, but do we have any idea what the demand drivers are behind it? Do we know what the interplay between COVID and the fintech growth looks like? Do we know how the Brazilian fintech landscape is evolving? I will attempt to look at all these factors and apply a macro lens to our investment thesis in StoneCo. I hope you enjoy. Guys, a lot of work goes behind the scenes in making these videos, and your help can go a long way. May I ask that you hit the like and subscribe button so that you continue to benefit from our top quality research? So let's get started. A quick look at the disclaimer section. Please note that this video is not meant to be investment advice of any kind. This report is solely meant for educational purposes. Now, since the last global financial crisis in 2008, investments in the fintech sector have been growing. The expansion of the sector was largely a technological response to the shortcomings of the traditional financial services industry, which came under extreme pressure during and after the crisis. Deloitte estimates that the fintech revenue will grow till 2024, and that too at an extremely impressive CAGR of 11.7%. There are several demand drivers fueling the growth in the fintech space. You have rapid urbanization. You have the ramp up in the technology infrastructure, where you have app downloads, 5G, smartphone penetration rates. There's a strong demand from millennials, and the regulation is also very favorable. So far, so good. What happened in 2020? The global deal activity in the fintech declined in 2020, which highlighted the potential effects of COVID. Yeah, you guys know what COVID is, right? However, COVID was not all bad. There were some key fintech trends that emerged. For instance, there was the digital-first mindset that consumers had. There was a need for cost savings and increased efficiency of fintechs because there was a lot of cost pressure for the organizations all over the world, as there was just no revenue. Then what happened was, the fintechs that the bigger organizations feared, they started to collaborate with these fintechs. And there was a partnership, a flurry of partnership between the fintechs and the larger organizations and tech companies, which created a very interesting ecosystem, and it became well established in 2020. So who led the digital transformation of your company? It's not the CEO, it's not the CTO, it's COVID-19. So how exactly has fintech performed during COVID? I went through an interesting market rapid assessment study that was published by World Bank Group in collaboration with the University of Cambridge in 2020. And according to that study, digital payment firms reported increases and in key market performance indicators such as transaction volumes, transaction numbers, and new customers. Firms in markets with stricter measures observed an even higher increase in their transaction volumes. So over here you see that the MENA region is leading the pack, and it's followed by Latin America. So guys, in a nutshell, I hate to say this, but as far as digitalization and COVID is concerned, they go hand in hand, and COVID gets a thumbs up. We've already seen how favorably Latin America ranks in the World Bank's Market Rapid Assessment Study for 2020. Let's further drill down into Latin America and assess Brazil's fintech landscape. Why Brazil, you ask? Well, simply because Brazil is the largest fintech market in Latin America and the fifth in the world with more than 750 fintech companies. It already had a glorious 2020, and the momentum is expected to continue in 2021. The annual growth per segment was high in all key segments, such as digital banks, trading and marketing, and lending leading the way. According to Bruno Diniz, managing partner of a fintech-focused consultancy Spiral M and one of the most influential fintech experts in Brazil, 2021 should see greater adoption of fintech solutions, a surge in interest in insurtech, open banking, and embedded fintech. There are 5 key trends that are shaping the Brazil's fintech industry in 2021, according to experts. Firstly, there is the introduction of Pix, a digital payment system, where 2021 should also see strong fintech development and innovation building on top of the Pix platform, Banco Bradesco, the country's second largest lender, started offering credit via Pix, and most importantly, the Banco do Brasil, another leading financial institution, began enabling Pix payments through WhatsApp. And then you have the Brazilian law that is promoting fintech activities. For example, the Resolution 4656, which has eased fintech registration. The Banco do Brasil, which is the Central Bank of Brazil, launched the Financial and Technological Innovations Lab, also called LIFT, which is a virtual environment allowing the collaboration between the market, technology enterprises, and startups, aiming at developing technological innovation, sharing knowledge, and evaluating of the project's results. And then we also see that innovative solutions are quickly adopted by Brazilians. Mobile banking has been commonplace for decades. So looking ahead, the fintech industry in Brazil is certainly one to look out for in 2021 for investors, given the strong annual growth per segment in the past and the key trends that are shaping the fintech industry. So we've traveled the world and had a look at the fintech landscape. We've also drilled down into the Brazilian fintech landscape. Now is the time to revisit our investment thesis in StoneCo. StoneCo is a Brazilian disruptor in the payments industry due to its cloud-based technology platform. It provides e-commerce type services across brick and mortar stores, online and mobile channels. It has three main business lines. Firstly, it's a payment provider for SMB and micro clients, as well as a digital bank providing loans and working capital financing. After acquiring Links, it is also active as a provider of performance software for retail. There are quite a few things to like about Stone. Firstly, the supportive macroeconomic outlook, especially in Brazil. What I also like about StoneCo is that management has skin in the game. They have around 20% insider ownership. Their strategic investment in Links accelerates their roadmap to become a one-stop shop for merchants of all sizes and verticals. They have a vision to build relationships with Brazil's SMBs through payment solutions and subsequently provide them additional services such as a digital bank, financing, or retail software. Price is what you pay and value is what you get. So what do you get from an investment in StoneCo? You essentially get an active client base which grows over 15% quarter over quarter and total payment volume growing 18% quarter over quarter. Additionally, and most impressively, almost 50% of clients start using other financial solutions in the form of digital banking, working capital financing, or credit loans. So why has the stock price performed so poorly over the past 1 year? Well, firstly, at MoneyWise Smart, we are in it for the long term. We do not care about stock price movements in the short term. We believe that the investment thesis is intact, especially after considering the macroeconomic outlook. No investment is without risks, and StoneCo is no different. We have laid out some of the major risks over here. It's your responsibility as an investor to do your due diligence. Firstly, on the FX side, if the Brazilian real depreciates against USD in the future, Stone's business would be worth less in USD. Now, Stone has a very ambitious execution strategy that they have laid out for themselves. However, as this strategy is extremely ambitious, it is not without its risks. Things can go wrong. On the prepayment and credit business side, the ability to secure capital at good rates, particularly when interest rates rise, is going to be challenging. There are also regulatory changes that continue to come up, and the instant payments Pix in 2020 will substitute debit card. Then on the less major risks, we have regulatory risks. Things continue to evolve quickly, and it's a very fluid situation. So we need to keep an eye on it as an investor. On the pricing risks and competition front, the ability to pass on increased fees from payment schedules depends on the market condition. Technology is also rapidly evolving, so they need to constantly keep up with the latest technology and trends in the industry. On the supplier concentration side for point of sales terminals, they have relied substantially on Pax Global in 2018 and are still concentrated, having 4 suppliers now. And then there's an overarching macroeconomic risk for operating in Brazil. Brazil, as we all know, is an emerging market, and there are a number of inherent risks of investing in emerging economies. You have the economic and political development effect, you have the inflation, you have the population trends that continue to change, and you have the political situation, which is also highly uncertain.
If you found this video useful, then I urge you to join our research platform. It's completely free, there are no hidden costs, and that's the place where we publish top quality research covering companies with the capability to compound in the long term. And that's also the place where we publish research discussing key investment concepts. So if you would like to increase your knowledge of investing, then you would surely benefit from joining that platform. The link is in the description section below. Guys, if you found this video useful, then don't forget to hit the like and subscribe button.